good morning or good afternoon, depending where you are. Welcome to the International Actuarial Association and Instituto dos Actuários Portugueses joint webinar on IFRS 17. So firstly, let me introduce myself. My name is Carla Sá Pereira. I'm a partner at EY Portugal, leading the insurance consulting department. And I will be responsible for hosting this webinar today. Before we start, just a quick housekeeping. So verbal capabilities are not available, they are turned off, but you're going to be able to give us some questions. You can access the Q&A on the icon on the bottom of your screen. We will answer to all the questions at the end of the presentation. So happy to have your questions here on the page. Additional, we are already recording this, so the recording and the presentation will be made available on the IAA website within the next day or so. So today for the agenda, I'm glad to welcome Micheline, Derek, and Dora. Micheline will be presenting IAA Model International Standard of Practice 4, ISAP 4 on IFRS 17. Derek will be presenting the IAA Model International Actuarial Note 100, IAN 100, also of course on IFRS 17. And finally, Dora will be sharing the challenges on key lessons learned on IFRS 17 implementation also. And as I mentioned, a Q&A at the end. So Micheline is going to present ISAP 4. Micheline Dionne is the IAA President-elect and chaired the IAA ISAP 4 task force, which developed the model ISAP 4 on IFRS 17. Prior to her retirement, Micheline was Chief Actuary at RGA, Reinsurance Group of America, and also served as the president of the Canadian Institute of Actuaries in 2009 and 2010. So Micheline, the floor is yours. Thank you.
Thank you very much, Carla. It's a pleasure to be with you, and a good day to all. I'm going to, maybe before I dive into ISAP 4, tell you what I'm not going to say about ISAP 4. I'm not going to go in detail about it. My purpose here is more to give you a sense of what we were thinking about, what were the important elements, and so it's all about the reasoning behind it as opposed to the exact wording. It's a 9-page document, so I hope after that you'll be, if you have not read it yet, that you will be interested looking at it. So the IFRS 17 took a very long time to develop. It's over 20 years, and since pretty much the beginning, the IAA has been interested and had a relationship with the IASB on IFRS 17. It was recognized very early on that actuaries had a word to say on how to value the liabilities of insurance. So it's a very long relationship and a long planning also on IFRS. So what triggered IFRS 17? Well, there was a wide divergence of approach between all the different jurisdictions. In fact, it was all over the map. Some people using a pricing assumption, mandated assumption, updated assumption, with or without margin, and the measurement did not necessarily include all the guarantees. And of course, this created an arbitrage between jurisdiction, which was not really in the interest of the public. So what does IFRS 17 brings? It brings a common set of accounting principles. It brings greater comparability between jurisdiction, leaving room for judgment, but also extensive disclosure to allow users to assess the judgment made. Next slide. So ISAP 4 complements IFRS 17. We were not going to repeat the whole text that was in IFRS 17. If you do that, you're at risk of misinterpreting the text, and so that was very dangerous. We decided to basically complement it more than rephrasing it, and focusing on the actual aspect of the measurement. So what is ISAP 4? It's principle-based, and it's not country specific. It means to be global. If any jurisdiction want to have some more specific about what's happening in their country, they can add to this. I mean, there's some flexibility in ISAP 1 in terms of being compatible with it. But because we were doing this for the whole world, we sticked on it to be principle-based and not to get into the specifics. It would have been much more than 9 pages if we'd done that. Not only we were not repeating IFRS 17, we didn't want to repeat ISAP 1. ISAP 1 are the general principles, and I'll get back to a bit what's in ISAP 1 later. But it applies to whether you're doing pricing, valuation, whether you're in life, in pension, and so on. It's the general principle. And that is on all the ISAPs that the IAA does. ISAP 1 is the prerequisite for all of them. And so the idea was to facilitate convergence in standard and focusing on the actual aspect, which first meaning projecting future cash flows, which was the basic of the work that had been done already before in all the jurisdictions, but also projecting future management actions. If you have products that are not guaranteed, you may want to you have to put yourself in with the change in the environment. How would the management react to those changes, and how would it adjust the dividend scale? How would it adjust the premiums for non-guaranteed products, that type of thing? And so that's in some cases definitively something new that was added there, which has adjustments. That's was something coming from the entities, but not necessarily easy to put in a model. So some words about that. And then also the discount rate beyond the investment horizon was something quite complicated, which we got some advice from IFRS 17, but we thought that we need a bit more. And so that's part of ISAP 4. Next slide. So how is ISAP 4 divided? That's basically the sections here that you see on that page that we covered. Specific knowledge requirements. Basically, you need to be comfortable with what the company has been doing, its history, its way it makes its decision, the type of product it has. So overall, good knowledge there. And the two other sections, treatment of processes, and again, the identification, combination, separation, group of contract, and the choice of measurement approaches. That's something that the actuary can do, but it also can be done by other groups. And the idea there was to say that if you are not participating in this, if you have no opinion, then you have to treat this as a prescribed, as you're going to sign on the overall work. And so you don't want to take responsibility for it. If it comes from somebody else that you know reports to you or have a good qualification, you can do. You can take it under your name and when you sign it. And even if it's come from other parts of the organization, which you don't know, but if you had done the work and you've looked at it and you agree with the conclusion, then again you don't have to say that it's under prescribed. There's the basic paragraph on selection of assumptions, which also is in a sense the core of the work of the actuary being there. There's some note on when you update assumptions to be careful. Sometimes it's an update. That is, you just because it's current assumption, so you need to update your assumption as to what the passage of time and the different appreciation of it. But if you're changing your models or you have a very different way of looking at this, then it's a change that is of different nature, and you need to talk to your accountants to figure out whether that's how it's going to be divulged, and there's more emphasis on disclosure if you need it. It's a major change. There's a paragraph on there's a section on transition, and at the end, the importance of disclosure of judgment. Everything that you need to do when what you've gone through needs to be disclosed, and that's what is being explained there. Next slide. Yeah, so I said I'm going to talk a bit about the ISAP 1. So what's the ISAP 1? It's about acceptance of assignment. Are you qualified? Do you understand exactly what's being required? Do you have the resources? Knowledge of relevant circumstances. So having a good discussion with so that you can understand exactly what your work is going to be used for. The level of materiality that you're going to work into. Data quality, or as an actuary, we're responsible to use. We need to use good data, so you have a responsibility there to assess the quality of the data, and so that's part of everyday work. You may need to rely on others as you do that, and that's fine. There's also some recommendation as what you do when you're relying on others, and then this thing that we talked about when you're having through assumptions and methodology, when it's set by you, whether it's prescribed or mandated by law. So that has to be disclosed. And again, we're going back to the famous principle of documentation and communications. That's for and then you cannot look at ISAP 4 really without looking at ISAP 1. Is really the message there. Next slide. A few words as I'm getting towards the end of this of my talk. I wanted to give you a sense of the seriousness that basically went into ISAP 4. We basically started this process in 2013 when we had to look at how we would organize ourselves, getting the first discussion. It was a very big project for the IAA. And then we worked along over the years, get some discussion, had to redo in terms of the emphasis idea that we were not repeating. IFRS 17 also came somewhere in the process, so it needed some definite rewrite at that time. But you can see that by mid 2017, it's when the IFRS 17 came out, and then just not so less than a year after, we were ready to issue our first exposure of the ISAP 4. So this preparation really worked well to get a rapid product and to look at to give people an indication of what to do. So we received at that point comments from 21 organizations or individuals. Basically, when we issue an exposure draft, we send it to all the member association of the IAA for them to comment. There's external body, there's supranationals that also get a copy of this and can send comments, and individuals also, if they want to. We look at all the comments and consider them, answer them to the best that we can, and discuss that. So in this sense, there was a lot of comments, I would say, in that first exposure, but not major shift in direction, I would say. But it did take us a year, as you can see, before when we issued it. I guess it was a 2 to 3 months for comments, and then all the time to look at it and get it also back to the committee that was overseeing our work for their comments, and then a year later we were ready to re-expose it. I would say there was lots of word changing, but not necessarily major flaw between the first and the second, but nevertheless there was enough that we wanted to re-expose, although this was discussed as to whether it was needed. And we at that point got comments from 13 organizations, and which we addressed. At that point, it was more minor even. And so by July 17, we were ready to do the final review. So this is in a fatal flaw type of thing, and then 3 limited changes were made. Overall, the ISAP 4 was issued in May 2020. This is because we were waiting for the last changes on IFRS 17, which was amended. They were amended in 2020. So that's the process that we followed. And I can tell you there was lots of seriousness in this and lots of work. And I certainly thank all the group, including Derek, that was part of that group, for all their efforts on this. Next slide. So ISAP 4 is a model standard. So it's something that we've worked and hoped that would be adopted by the different FMAs, but it's still a model. And when you want to adopt something like a standard, even though you have a model, there's still a process to follow from your end. That is, whatever adapted, if you want, for example, to have some local product adjustment, whatever. So you make your, whatever your recommendation, you need to expose it to your stakeholder. Again, very transparent in treating how you treat the comments, and get approved. And hopefully you also have a general standard like ISAP 1 and that to take into consideration. Why would you do that? Basically, it's been thoroughly revised, so it should be of some comfort to you. It's also giving confidence locally about what you're doing, because it has been reviewed by so many groups. And it's also saving you from doing it yourself. And so to the extent that you want to be efficient on your resources, that's really of help to you. Next slide. The IAA has also done a number of monographs at the same time to help its thinking in terms of developing, but also to help the others. So we have 3 monographs that you can find on the IAA website under publications. So the discount rate, risk adjustment, and stochastic modeling. And then you also have the International Actuarial Note, which I will not talk about because that's too direct to talk about it. So thank you very much. Thank you. And I will also, don't forget, I'll welcome you to your questions. Thanks.
Thank you very much, Micheline. So we move now to Derek. So Derek Wright is the current chair of the IAA Insurance Accounting Committee, and was joint chair of the groups that develop Beyond 100. He was also a member of both the IAA ISAP 4 and IFRS 17 task force. So prior to his retirement, Derek was a partner at Deloitte in UK and laterly in Canada, and is now a non-executive director. Thank you, Derek. The floor is yours.
Thanks, Carla, and good afternoon, good morning, etc. to wherever you might be. Yes, IFRS 17, as it now is known as, has been a long process. It started off as IFRS 4 phase 2, and or ISB, I don't know, but I started talking on that in about 1997. So 25 years on, it must be coming to the end of my talking on this subject, but I'm glad to be here to talk about the IAM. So what is an IAM? Well, an IAM is an education document on any actuarial subject that has been adopted by the IAA to advance the understanding of that subject. It is not an ISAP, and Micheline has very well set out what an ISAP is, but it's not an ISAP, and it's not intended to convey in any manner that it is authoritative. Rather, IANs are educational documents. They're there to help assist actuaries in complying with the ISAP and implementing, for example, an IFRS standard such as IFRS 17. It is to provide non-binding guidance on an actuarial topic. It's important to remember that it's not binding, it's not mandatory. The IAA developed these model education notes, and it's that to every individual actuarial association, such as the Instituto Portuguese Actuaries, as to whether they're going to adopt this education document in full or in part, or just develop their own things. But it's there to help peoples who are working in a subject, and in this case, IAN 100, is to help people who are working on IFRS 17. So next slide, please. Thank you. So yes, IAN 100, it was written to assist actuaries in complying with IFRS 17 and ISAP 4. It covers all the main topics that are in IFRS 17. It comprises of 5 sections and 17 chapters, and it's a short read of 255 pages. So, you can read ISAP 4, which is 9 pages, but, if you really want a good read, it's this one at 255 pages. It's not a definitive statement of accepted practice. And as I said, the language is not directive. When we were developing this, we had to make sure that we didn't use the word shall or should or must in our document, because that might imply that it is mandatory or it is directive. The only times we use those words are if we are quoting directly from IFRS 17 itself, and they use that word. And we have been very clear in writing this document that where we are using quotes from IFRS 17, we show those in italics and we take it exactly as it's in IFRS 17, because if we started trying to abbreviate it, we would be at risk of making an error in our understanding. So it is, sometimes you might think, well, why have you got all those words there? It's because we didn't, abbreviating it could cause an issue. The way the IAN has been written, it's a series of questions and answers. We thought that might be an easier way for people to get to understand the subject rather than a lot of text. Each chapter can be read by itself. You don't need to read the whole document to understand any particular subject. So if you just want to understand what we're saying about contractual service margin, CSM, you can just go to that chapter and read that, and you don't need to read any other chapter. All that we do remind people, when any chapter they look at, just go back to what we say in the introduction, because there are a few words of warning in the introduction, but otherwise each individual chapter can be read by itself. It did take a long time for us to write this, primarily because the IASB kept changing the drafts of it. We had a discussion document, then we had various exposure documents. And so there was some frustration amongst member associations. Well, when are we going to get it? But unfortunately, we couldn't issue it until the final version was out there, and then it had to go through due process. So it was finally released in August 2021, although there had been advanced copies of it around. So member associations were using previous drafts and exposures, but we had to be very wary that they only, if they were quoting it, they're going to adopt it, they use the final version. So next slide, please. Thank you. So just a brief few comments on each of the chapters. The introduction just gives a bit of blurb at the beginning, which is helpful to understand as you're going through it. And we do mention in there that, if we quote a paragraph from the IFRS 17, it is there in whole. It might be there in whole, or we might take a bit out, but we'll always have it in italics. And so if we say paragraph 27 or paragraph 3.6, that is a paragraph from IFRS 17. There are some illustrative examples in the document. but they are there just as that, to illustrate. They're not saying this is the practice you must adopt. It's an example of what could be done. So the first chapter, or chapter 2, sorry, no, chapter 1 should be classification of contracts. Yeah, it says there's an introduction before number 1. Number 1 should say classification of contracts, and that is my error because I wrote the slide. So anyway, so classification of contracts is chapter 1, and it considers the approaches that's required in the classification, including the identification of what's in IFRS 17 and what isn't covered by IFRS 17 and by contract boundaries. We then go on to 5 chapters 2 through 6, which are based around the general measurement approach, or the general measurement model. So chapter 2 looks at the estimates of future cash flows, and it considers the requirements for determining those future cash flows, whether they be to calculate liabilities for remaining coverage or liabilities for incurred claims. And it looks at things like, you know, what estimates might you be using and how do you determine those estimates. Chapter 3 looks at discount rates, and it considers the time value of money in the measurement of the future cash flows. It discusses top-down and bottom-up approaches. It also discusses reference portfolios and replicating portfolios. Chapter 4 looks at risk adjustment and the criteria for measuring risk adjustment for non-financial risks. It also discusses the methodologies that could be used for determining the equivalent confidence interval that you need to disclose. Chapter 5 looks at level of aggregation and considers the appropriate level of aggregation when accounting for business under IFRS 17. That includes the determination of the unit of account and the setting of portfolios and groups to meet the requirements of IFRS 17. Chapter 6 is CSM. Now, for just about every one of us, CSM is a new concept. And this idea of coverage units is something that took a lot of time to get to understand. And that's discussed in question 6.14. But you know, it probably for many, this is one of the more important chapters or more helpful chapters of the IAM. If we could go on, please. So there are variations to the general model. You know, there is the premium allocation approach, PAA, and this looks at the criteria to be met for an insurance contract to follow the PAA rather than going the whole general measurement approach. Chapter 8 looks at contracts with participation features. Now, for a lot of us, we had to get ourselves used to a new set of words, because for many of us, when you think of participating products, you think of what used to be, or sometimes referred to as, with profit policies. But participation features under IFRS 17, as I'm sure you all know, goes a bit wider than just the traditional with profit or par policies. And understanding the eligibility and measurement for the variable fee approach is a significant matter in this chapter. And then chapter 9 looks at the treatment of reassurance, both for contracts held and for contracts you cede. And so, you know, it's a very helpful set of questions. So if we could move on, please. We then look at the various other topics. The uses of fair value, whether we discuss in chapter 10, approaches to determining fair value. Then in chapter 11, looking at how their fair value is used in business combination and portfolio transfers. And then in chapter 12, we look at transition. And of course, fair value is one of those approaches that could be used. In section D, we have in chapters 13 and 14, brief papers on embedded derivatives, and then on contract modification and derecognition. And then we come to presentation and disclosures. These are 3 chapters at the end, and these are chapters which are likely to be updated as we move forward, because, you know, as people start adopting the standard and we start seeing how disclosures are made, we will probably want to revisit these 3 chapters and make changes. And, you know, it's interesting that already people are beginning to think, well, okay, what do we disclose here? How are we going to disclose it? And if you look at the this section, it's really helpful because it used model standards for firms like EY and PwC, but they may well have changed their thinking of it since we used some of their examples in this education note. So if we could move on, please. So what are the next steps? Well, it took us a long time to develop this, but we need to make sure that we keep the document current. And so we will need to review the education support for IFRS 17. And so if we could move on, please. So under the IAA's 3 areas of influencing, assurance and advancing, we want under influence, the Insurance Accounting Committee is continuing to liaise with the IASB. We did respond to the IFRS paper on CSM for annuities. Unfortunately, they didn't follow our suggestions, but that was their decision. But we do respond. We do have continuing dialogue with the IASB on IFRS 17. We will continue to monitor the use of this education document and the actuarial models that are being used for IFRS 17. And we have organised webinars and other educational tools around IFRS, around the IAN 100. There was a webinar shortly after we published IAN 100, and we've got today's meeting, and there have been others as well. If we can move on, please. So we are continuing to monitor how IAN 100 is being used by member associations. Whenever the Insurance Accounting Committee meets, it's one of the discussion points as to how is it being used, which countries are using it. And we will consider additional education needs and potentially papers. At our meetings, we do discuss topics that people are finding difficult as they try to adopt IFRS 17. And we've been looking at things like the impact of the bow wave, and we obviously had the discussion on CSM for annuities. And so it may be that from time to time we will produce education notes, which will be published on the IAA website. And then, thank you. And then we are considering doing some appendices to IAN 100. Should we be producing some examples And so it will be really good if you do have suggestions as to where you might find it helpful. If we had an example of practice, please do let me know, and we can consider that at our meetings. And this is a very timely webinar, because the next meeting of the Insurance Accounting Committee is in Montreal in a couple of weeks' time, and we will be discussing practical implementation issues. So if you have any, please do let me know. And that's all from me. Thanks, Carla.
Thank you, Derek. So now we'll move to Dora. Dora joined EY in 2017 and holds the position as a Director of Actuary and Risk Services at the Financial Services Consulting Department. Since the start of her journey here at EY, she has been the responsible for IFRS 17 and IFRS 9 implementation projects in Portugal. Prior to joining EY, Dora worked for around 12 years at the Portuguese Supervising Insurance Authority. Thank you, Dora. The floor is yours.
Thank you, Carla and Micheline and Derek, for your presentations. Good afternoon and good morning at all the attendees, and welcome to this webinar. It's a really pleasure to meet here with you today on this session. I promise it was not agreed up, but I already read the IAN 100, and it's indeed an excellent guide for actuarials and all the other stakeholders. I thank you so much for all the work that you are performing on these topics. So in this webinar, I would like to share with you the main challenge that we are facing in the IFRS 17 implementation projects, the key stakeholders involved and how our market is structured, and the key lessons learned so far. So moving to the next slide, please. As you know, IFRS 17 is being a high transformation in the way how the insurance analyze and interpret their insurance financial statements. Many insurance companies have their IFRS 17 implementation journey in course. When we go live in 2023, there are still many changes needed to apply the approaches and options defined by each entity, some of them that imply a high effort and costs for the market. So the IFRS 17 is the new insurance contract accounting standard. Also, IFRS 17 does not impact the fundamental economics of insurance business, because the business doesn't change. In fact, it will impact where, when, and how specific items from insurance contracts will be recognized on financial statements. One key important impact is the timing of expected future profit recognition. While under IFRS 4 and the local GAAP here in Portugal, new business gains are currently recognized immediately in income. Under IFRS 17, new business gains will be recorded in the CSM, in the balance sheet, and recognized in the P&L over the life of the contract. Another key impact is the way how you are going to calculate the liabilities that will more similar with Solvency II. Without a doubt, the role of the actuary will be crucial and the center of the future financial statements work. Moving to the next slide, please. So regarding the main challenge, at the beginning on the IFRS 17 implementation projects, most insurance could already foresee the main challenge expected. As such, the need to develop technical guidelines and accounting policies for each of the standard requirement in order to support decisions and serve as a basis for the implementation. We need to prepare a pro forma financial statements to identify data requirements and develop improvements to the data models and design the chart of accounts of each entity, analyze the implications at the business level, at management information level, for example, KPIs, business plan, prepare a project plan and have a view of required resources and costs. Last but not least, plan and conduct pilot tests focused on financial impacts in order to test transition methods and the impacts of key accounting decisions. However, the real implementation programs plans have been suffering much higher adjustments than insurers and other stakeholders involved initially expected. That's the reality, the truth. In fact, well, only when all of us started to roll up our sleeves and get down to work, the practical difficulties and issues started to appear. So in terms of the main challenge, we would like to highlight some of them. If you could move to the next slide, please. In this slide, we have an overview of the main challenge that you are facing. And in the next slide, we will deep dive in each of one. If you can move, please. So the adoption date of the new financial reporting standard is drawing near. And the closer you get to finish line, more challenge we face. So in this line, we highlight the main challenge that you have been facing and we would like to bring to this webinar for a reflection. And sincerely, I believe that most part of the attendees of today have feeling the same pains. In general, we can safely assume that in addition to the complexity of interpretation and the measurement models to be applied that require different approaches and assumptions, the main challenge on the implementations projects are in the data integration between several systems and the data transformation needed to produce the results as required and expected. So focusing on the now to the challenge, so large number of systems to align and many simultaneous developments requiring integration. Since core technical systems, data warehouse or data marts, actuarial models, and their customization on actuarial systems with all approaches and assumptions required by the standard, the IFRS 17 method to calculate the CSM and the different sources of the profit, sub-ledgers, and in the end of the process, the general ledger. So without a doubt, it has been a big challenge to align and integrate all these systems into a proper timeline. For instance, there is no consensus on the most appropriate approach that should be adopted for transition. We have some companies preferring the fair value approach, in one hand to save on implementation costs and due to the lack of the information since the inception, and others preferring the full retrospective or modified retrospective approach to achieve desired financial results. So, but the reality is that all systems were still very much a work in progress as the standard was developed and implementing. So it has been required several developments outside the tools that require transformation and integration between systems. The majority of the solutions available in the market are not prepared to calculate the transition for insurance. And this is a big challenge and it has implied high efforts and costs to the insurance companies. Another challenge is related to the sourcing quality data at the level of granularity required by the standard. IFRS 17 has significant data requirements and a number of these are still open to interpretation, or let's say what will be the boundaries and the benchmark for each requirement. One of the significant challenges around the data is that historical data is required for CSM calculations for all insurance contracts right back to inception, since policy data, expected profitability of contracts at time of issue, several sources of systems, discount rate derivative since the inception, the correct allocation cost since the beginning of the contracts. So insurance will need assumptions for each reporting period from policy inception at IFRS 17 group level. In fact, the lack of reliable historic data presents a huge challenge in the implementation. Another challenge, I would like to highlight the develop improvements to the data model and chart of accounts. In this particular topic, Portuguese insurance has an additional challenge, in my view, in our view, when you compare to other countries, that is related to the mapping that needs to be performed between the subledger already configured under IFRS 17 solutions that has the disclosure produces by default at IFRS 17 standard, and the local chart of accounts launched by Portuguese regulator that imply a more level of disaggregation not supported by this solution, by the solution acquired. So there are many improvements and workarounds needed to perform outside the tools to have the data with necessary level of detail to report and disclosure in the future. And again, we cannot forget that the time for the implementation is very tight. Moving to the next slide, please. In this slide, I think I would like only to highlight that the real data is different to test data. I think it's important to highlight because most insurance didn't know yet what exact problem they will have around data, as many were not using live data and relying on mock data for testing. New mapping between systems requires a lot the IT support. It requires technology teams, vendors, as well the accountants, actuaries, and leadership teams all work closely together. A continuous support from the IT is required due to any change, however small it may be, has an impact on the workflow process that involving data, systems, and their integration. So the involvement from IT teams is fundamental. Another challenge is the large volume of communication across many teams and labor-intensive activities. As important, so, is making sure that the teams who currently manage different business financial performance are involved in the analysis. Making sure the project team and the analysis teams work closely together is key to fleshing out issues and explaining the results. Because unfortunately, as a consequence of the long implementation projects, as the IFRS 17 projects, contract delays in between project phases can make it difficult to ring-fence the same team all the way through implementation. So further compounding the resourcing issue and the implementation conclusion in the foreseen timelines. So moving on to the stakeholders' involvement in our insurance Portuguese market. Here I would like three important institutions that you have in Portugal, similar that there is in other countries. So the first one is the IACF, our Portuguese insurance regulator. It's an institution that regulates and ensures the proper functioning of the insurance market and contributes to ensure the protection of policyholders. Focused on the IFRS 17, our regulator launched the draft local chart of account, as I mentioned before, and have in place an IFRS 17 implementation program to follow the market. This implementation program has been made by qualitative and quantitative impact studies and also involve a public disclosure of these results. And ISF has been performed regular meetings with APS and our external auditors. So the role of the regulator and not only for the pressure, but to give a guidance and monitoring the implementation project in the market is very important, and it really appreciated by all the involvements. The APS, it's our Association of Portuguese Insurers, have been promoting interests of insurance markets, have cooperated several initiatives and exchange of information between the insurers. Have also launched specific IFRS 17 qualitative questionnaires, and have regular meetings with insurance in order to promote open discussions and experience sharing during the implementation. The APS is the preferential channel, the direct contact to ASCF in order to obtain a convergent positions, particularly on the IFRS 17 now. Just to let you know that 90% of the insurance market in terms of the insurance business and human resources employed by the sector is member of APS. IAP represent the actuarial profession in Portugal, promote the actuarial profession, its reputation, have contributed to the training and professional development of its members, and also had several initiatives in the market in order to promote the importance of actuarial rule. Regarding our market, we have around 37 insurance companies established in Portugal under supervision by ASCF, and after that we have several branches, but these 37 insurance needs to report locally the accountings and are supervised by our regulator. It is also important that insurance should engage with the auditors on accounting policy change that will influence the systems built before the work stream is significantly advanced. So we are observed that auditors is very near also to the insurance, and it's helpful to assure that implementation runs well. Moving on to the next slides, please. Bearing in mind all the topics covered in the previous slides, I would like to emphasize the following 4 lessons learned so far. I think we have much more, but we'd like to emphasize setting realistic expectations, focus on the final outcomes, agility, and collaboration. Why setting realistic expectations? So, unclear business requirements and data quality issues have been delayed projects. Building substantial contingents to deal with unexpected events, slower than expected implementation, and changes coming IASB and regulators is crucial. We would be more realistic about the potential problems that will arise in the IFRS 17 projects. Realize that the standard has so many options available and many requirements can be interpreted in various ways. So there is no much time to test all the options, so consistency can be an issue. The second lesson learned is the focus on the final outcomes. And why? So an accounting standard implementation process is rarely straightforward or linear. So several departments are involved, often with very different perspectives and priorities. So the need to keep the priorities aligned and everyone heading in the right direction is critical to achieving the desired impact. I think that the stakeholder management probably underestimated how difficult it is for the resources not fully dedicated in this kind of projects to get familiar with the IFRS 17 requirements. This would be the priority of the insurance at this stage. But you know that you need continues to sell insurance and make the business So it's a critical trade-off, let's say. Third lesson learned, agility and why. So insurance cannot wait for all the uncertainties and unknown components of IFRS 17 to settle. So an agile approach provides the flexibility to respond to developments and changes as they occur. Implementing IFRS 17 is like trying to cross a bridge while building it. So understanding potential risks and likely responses is key. Last but not least, because I think the most important is reality, the people and the persons. Given the complexity of the standard, a collaborative approach is vital. In successful programs, the teams supporting data, technology, and vendors, as well as the accountants, actuaries, and leadership teams all work closely together and are structured to achieve collaboration. This requires all participants to understand the context around how policy decisions result in data flows through actuarial and accounting systems to final disclosures. So the importance of having teams with the right skills to understand and explain the results is crucial. And IFRS 17 will imply a necessary change on the governance model, particularly the future role of the actuaries in the assurance for the future. So I finished my presentation. Thank you so much for the attendees. I'm happy to answer any questions that you have. Thank you so much.
Thank you very much, Dora. So thank you also, Micheline and Derek again. I hope you all joined these, I think, amazing presentations on very important topics, and we all are working hard on this one. So now we expect people to write their questions. For now, we have only one, so from Penty. I think this is, of course, a question to Dora that was linked with the fact that you were highlighting that we have 37 insurance companies being supervised by the regulator. And the question is, how many of those 37 insurance companies shall issue IFRS 17? Yeah. So Dora, if you don't mind answering about what was the approach of the regulator here for the insurance operating in Portugal, please.
Sure. So all these insurance companies needs to issue their financial statements in a full IFRS, so IFRS 17 and also with IFRS 9. Because all our market is supervised by our Portuguese regulator, and the regulator launched since 2 or 3 years ago that there is an intention that all the Portuguese market apply a full IFRS. Sorry.
So our market is a full IFRS compliant.
Yeah.
We'll wait a couple of minutes for more questions, please. Please don't be shy. Micheline, Derek, and also Dora, very happy to answer some of the questions.
So Dora or Carla, I'll ask a question if I can.
Sure.
You say all 37 companies will need to produce statements under IFRS 17 or under IFRS 9. Are they all ready? Is everybody in a position to be able to do so now, or are we working on the principle there's still at least 5 months before you have to publish anything?
They have their implementation projects in course, as I mentioned in the presentation, but I believe that the Portuguese market are preparing in order to comply or minimum complies with the standard. So you need to you don't forget that only these figures will be disclosures in a public way on 2024. So there is a work until then, we know, but I think the market It's a big concern for all the market, but the market is doing their work and try to do the best.
Yeah, thank you.
Of course, Derek, we can see different stages of implementation. Of course, that's the normal practice, but the market's working hard to be compliant.
I think that's the same in most of the world, that some are more advanced than others.
More questions?
There's one just come through.
Oh, let me check. So Nuno Matos is putting a question. I'll read it out loud. Considering the wide degrees of freedom given by the IFRS 17 and indeed the high judgmental decisions to be made, would you agree that the notes to the accounts will be critical for comparison purpose under IFRS 17? Nuno is not addressing who is going to answer this. I don't know if who is happy to answer. EY. Thank you very much, Nuno. Dora, you want to?
Yes, I can try to answer. Yes, I agree that the notes of the accounts will be the immediately way in order to compare all the markets and try to align some benchmarks. I believe that it will not be in the first year and the second year. So I think about the comparison and the transparent that the standard intends to be, has a principle and main goal, will be a difficult challenge for all. But disclosure will be the best way in order to align this kind of comparison between the companies. I'm not sure if I answer your question.
Yeah, I think you did. I don't know if Derek or Micheline wants to add anything else.
Thanks. No.
Thank you, Nuno. So we don't have more questions. If you agree, I will thank you again, Micheline, Derek, and Dora, for answering these few questions that arrived, and for your great presentation. It was a really pleasure to me to host this webinar. I'll get to the end of it, so conclude the seminar. Thank you also for all the attendees. I hope you had the opportunity to learn a little bit more on IFRS 17 and also enjoy this joint webinar between IAA and IAP. And let's work on IFRS 17 hard to make it happen in the coming month. Thank you all. Thank you. Have a nice day. Bye-bye.
Thank you all. Bye.